It's time now for On the Radar, where we ask an investing professional what they're looking at in today's markets. We're back again with Lyle Stein. He's president at Forvest Global Wealth Management, and we're going to talk about the remarkable rally in the price of gold, which many investors believe is not over yet, and the relationship between the gold price and the price of gold mining stocks. Let's bring a graph that you brought to us, Lyle, and it compares the two. The white line is the price of gold, and it shows percentage gains over the past several years. We're beginning here in 2018, and the blue line shows the Vaneck Gold Miners ETF, one of the benchmark ETFs in the space. Take it away.
Yeah, basically what the chart shows is that when you get a move in gold, the miners accentuate the move up. So they're a high beta play, in effect, on the price of gold. And you can see that back in 2018, 19 to 20. Yeah. Then when gold stayed constant, the miners gave up the ghost. Mm-hmm. We ran into cost issues and alike. Gold has taken off in 2024, and the stocks were lagging basically up until January. But now you can see how the blue line has advanced past that white line. The gold stocks are beginning to outperform. And when you look at investing in the gold area, there's really four ways you can play it. You can buy bullion, mm-hmm. You can buy an ETF, or you can stick a bar in your basement. Mm-hmm. You can buy a gold miner, where you get operating leverage. You can buy a gold royalty play, where you get a constant movement with the price of gold because they own percentages of the top line of the miners. Or you can buy something like Sprott, where you have an asset play that basically manufactures ETFs and puts client assets in the assets they're doing. There's all kinds of ways to play gold, but the interesting thing is the shock in the price of gold. You think about gold prices, three factors most analysts look at. They look at, number one, the real interest rate. Real interest rates go up, gold should go down. We've seen a massive jump in real interest rates. Mm-hmm. What's going on there? Yeah. The second thing is you look at the US dollar. US dollar goes up, gold goes down. Well, the US dollar is going up, gold is going up. I mean, these are factors that are causing, I think, fits in analysts' head. Something else is going on out there, and we think it's central banks trying to diversify their holdings of alternative currencies instead of the US dollar. And
they're buying gold. Is that the narrative?
Absolutely, they're buying gold. And they're buying gold. I think it's becoming an alternative play, in effect, for things like Russian oil or commodities. When China's buying from Russia, Russians don't want US T-bills, so they don't want US dollars. They want something hard. Gold is kind of filling a void that is causing this concern. But gold, I'm shocked that it's as high as it is, at close to $2,400, but it seems to be on an uptick. And the way we look at it in a portfolio is a diversification pool. It's important to diversify your holdings. And then the last thing that can impact gold is calamity. It's a situation like we had this weekend, escalating.
For retail investors who want to invest in gold miners on the view that the share prices may catch up to the price of gold, what do they need to be aware of? And I ask that question because gold miners can be prone to missteps, to poor quarterly results, to political risk in foreign jurisdictions. There's all kinds of risks, it seems, in that sector.
I've got an arms full of risks you can identify. But you look at the impact. In fact, if you look at the two big ones, Newmont and Barrick, the two biggest gold mine companies in the world, they were both down 40% or more back in January, February. Now they're making returns. A lot of the bad news, I think, has been baked in. These companies have also been under attack by investors because they have not been efficient with their capital use. So it's not a bad time. All the bad news is pretty well known. Now the only thing is the gold price.
That's Lyle Stein.